Hello, my name is Rowana, and I am your host of this series of courses. Welcome to our beginner-friendly course on banking basics. Whether you're new to finance or just curious, this is must-know stuff for everyone. Learn how banks work, why they matter, and how to manage your money smarter, from savings to loans. It's super easy to follow, with clear explanations tailored for you. Get ready to take control of your finances with confidence. Let's dive in and start the journey. Ever wonder why banks are such a big deal? Buckle up, because they're the heartbeat of your wallet and the economy. Banks take your savings and lend them out for things like homes or businesses, making money on the interest. But it's not just about cash. It's a wild ride of trust and balance. Knowing how banks work helps you plan for that dream car or cozy retirement. Stick with us to uncover why banks aren't just buildings, but key players in your financial future, and why they're way more complex than you think. Think banks just hold your money? Think again. They're like financial jugglers, taking your deposits from savings or checking accounts and lending them out for mortgages, cars, or startups. Here's the kicker. They charge borrowers more interest than they pay you, pocketing the difference. But savers can grab their cash anytime, so banks must keep extra on hand. Deposits alone don't cut it for loans either. This high-stakes balancing act keeps the economy spinning. Want to know how banks make your money work for you? Let's dive into the nuts and bolts of banking. Picture a bank crumbling because everyone wants their money now. That's a bank run, and it's a banker's nightmare. Back in the Great Depression, one guy demanded his cash to test his bank, then left it when he saw it was safe. Trust is everything. If people panic, they rush to withdraw, and boom, the bank fails. Savers can pull funds anytime, so banks need cash ready. Today, the government's got their back, preventing collapses. Curious how trust keeps banks alive? Let's explore why confidence is the secret sauce that stops financial chaos. Ever think banks could survive without Uncle Sam? Spoiler, they can't. The government's like a superhero, depositing cash, lending to banks, and saving them when trust tanks. If people lose faith and yank their money, the government swoops in to stop the collapse. It's not just a US thing. Banks worldwide lean on their governments. Love it or hate it, this backup keeps your savings safe and loans flowing. Want to know how this partnership powers the financial world? Stick around to see why banks and governments are tighter than peanut butter and jelly. Can banks lend just your savings? Nope, that's not enough to keep the lights on. They borrow extra cash from the government based on what savers deposit, then lend it out for homes or businesses alongside your money. This boosts their lending power, but makes things tricky. Globally, banks rely on this government lifeline to stay afloat. Curious how banks stretch your dollars to fuel the economy? Let's unpack this clever trick that lets them lend more than they have, keeping your financial dreams, like that new car or startup, within reach. Heard the Fed's slashing interest rates? That's your cue to perk up. The Federal Reserve is the big boss, watching over banks and setting rates that decide how much loans cost. These rates drive the economy, affecting jobs and prices. Lower rates could mean it's time to refinance that mortgage. The Fed's moves touch your wallet, from credit cards to savings. Want to know why this mysterious group matters to you? Let's break down how the Fed keeps the financial system humming and why their decisions could save you cash on your next big purchase. Who's the second most powerful person in the US? Hint, it's not a movie star. Meet the Federal Reserve's chairman, like Jerome Powell, appointed by the president. They lead the Fed using a cool trick called open market operations, buying or selling government bonds to tweak interest rates. This controls borrowing costs and keeps the economy rolling. Most folks don't get the Fed, but it shapes your life. Curious about their secret sauce? Check federalreserve.gov and stick with us to see how this financial wizardry affects your loans, savings, and even your job. Ever wonder how banks rake in cash? It's like a money-making magic trick. Banks pay you a tiny interest, say 0.3%, on savings, but charge borrowers way more, like 4% for loans. That gap, called the net interest margin, is their profit. They also borrow cheap from the Fed, maybe at 2%, to lend at higher rates. The prime rate, for top customers, sets loan benchmarks. Want to know how banks turn your deposits into dollars? Let's reveal the secret behind their profits and why it matters when you borrow or save. Ready for a peek inside a bank's wallet? Let's visit Webster Bank's website. They pay savers about 0.3% yearly on savings accounts. That's your reward. But borrow for a 30-year mortgage? You'll pay around 3.96%. That gap is their profit, called the net interest margin. Every bank's site shows similar rate differences. Rates vary, but the game's the same. Charge more for loans than they pay for deposits. Curious how banks like Webster cash in? Let's explore this real-world trick to see how it affects your savings and loans. APR, or simple interest. What's the deal? Get ready for a financial face-off. APR, or annual percentage rate, includes compounded interest, so unpaid loans grow pricier over time. Savings work the same. More interest means more future earnings. Simple interest? It's just on the initial amount, no compounding. For example, a bank might charge 4% APR on loans, but pay 0.3% on savings. Knowing this helps you pick smart loans or accounts. Want to avoid costly surprises? Let's dive into why APR matters for your wallet, whether you're borrowing for a car or growing your savings. CDs, not music discs, but money growers. Certificates of deposit are like savings accounts on steroids. You lock your cash in for 6 months to 5 years, earning higher interest the longer you commit. Banks love this stability, and you get a sweet deal. Plus, CDs are super safe, government backed up to $250,000. But you can't touch the money early without a fee. Curious how CDs can boost your savings? Let's uncover this low-risk gem that's perfect for parking cash you don't need right away, making your money work harder than a regular savings account. Are CDs your savings soulmate? Let's find out. They pay more interest than savings accounts and are rock solid, backed by the government up to $250,000. You know exactly what you'll earn. Sweet. But here's the catch. Your money's locked for the term, and early withdrawals cost you. Plus, CD interest gets taxed like regular income, not like stocks. Want to know if CDs are worth it? Let's weigh the awesome perks against the pesky downsides to see if this banking superstar fits your financial vibe, especially if you're cool with stashing cash for a while. Want to see CDs in action? Let's hit VentureGo's website. They offer fixed-rate CDs with steady interest and step-rate CDs that adjust, like 1.73% for some. Longer terms often mean better rates, but VentureGo might pay more for 19 months than 9 or 29, depending on rate predictions. Step-rate CDs shine if rates climb. Rates vary by location and time, so check online. Curious how to pick the right CD? Let's explore VentureGo's options to find the perfect term and rate for your savings, making your money grow smarter. Ever dreamed of cruising in a new car or owning a cozy home? Banks make it happen, and we're spilling the tea on how. Banks are the MVPs of home and car loans, powering life's big moments. Want in? You'll need steady cash flow. Your mortgage can't be more than 4 times your yearly income. So, earning $50,000? You could borrow $200,000. Bring 2 years of tax returns and recent pay stubs to prove it. Here's the kicker. Your credit score's your golden ticket. It shows banks if you're trusty with debts. The FICO score, from Fair Isaac Company, comes from Equifax, Experian, or TransUnion, tracking your bill payments. Scores run 0 to 850. Aim for 700 plus for the win, while below 600's a bummer. Check your score free at those agencies. Struggling? Pay bills on time to boost it. Ready to score that loan? Keep watching to master your money game. What is the key takeaway? Banks are central to the economy and personal finance, managing deposits and loans while relying on government backing to maintain stability. Understanding banking mechanics, such as how banks earn profits, the Fed's influence on interest rates, and the importance of credit scores, empowers individuals to make informed financial decisions, like choosing CDs or securing loans. See you next time. We will talk more about investment.